Hey everybody, Mike Ferrazzi for Super Loans, NMLS 237341, and today I want to go over a loan program type, a mortgage loan program type that not a whole lot of consumers, home buyers, prospective home refinancers know about because it's not really advertised that heavily to the people who get the loans, and I'm not sure why. Now, this product category in the industry is known as non-QM. Little bit of a backstory on these things. Back after the Great Recession, the mortgage meltdown of 2008 and 2009, the government defined what a qualified mortgage is, or at least what it should be, based on what the government thinks it should be. And the reason they felt the need to do this is because one of the huge underlying causes of the mortgage meltdown and the following Great Recession was that a whole lot of lenders were giving a whole lot of loans to people who couldn't really afford to pay them back. There was a lot of programs out there, stated income loans, where you could just tell the bank how much you made and they just trusted you. They didn't verify with any income documentation or anything like that. Well, when things like that happen, there's going to be a subset of people who tell the lender that they make a whole lot more than they actually do so they can qualify to purchase a home, because starting payments for the first year or two were pretty good, but those mortgages were set to adjust to a proper loan payment after that first year or two. And very quickly, the people that didn't sell their homes found out that they really couldn't afford that payment. Not only were there stated income loans, but banks were lending 100% or more of the property value to these buyers on these loans. So commonly you're dealing with people who couldn't afford the payment to begin with, and they're not having to put any money down at all. It was a messy situation. The result was a bunch of foreclosures and short sales and property values plummeting. So the government steps in and says, we're going to tell you what a qualified mortgage needs to be. And that's fine because they used a pretty standard definition. One of the main things included in this definition of qualified mortgage was income verification. They told all lenders that if you're going to give somebody a loan, you have to verify their income to make sure that they actually make what they say they make and that they're actually going to be able to afford those loan payments. I know, novel idea, but they had to put this stuff in writing because underwriting standards had fallen to a level never seen before, and they wanted to put a fix to that. So they did. The issue is with the type of income verification. They went on to specify that the income had to be verified with federal tax returns and paycheck stubs and, audited profit and loss statements for self-employed people. And this is where it gets a little tricky, because if you're verifying the income of someone who's self-employed based on audited P&Ls and tax returns, if that business owner is taking full advantage of their tax situations and all the things that they can write off and do in order to kind of lessen the burden, so to speak, of paying those taxes every year, the tax returns aren't going to be an accurate representation of what that person actually makes. It's going to show a lot less income than reality shows for that business owner. So over the years, the decade or so following that Great Recession, there have been a nice group of privately owned mortgage lenders who have created the non-QM sector of mortgage loans. Now, we're not bringing back stated income loans. We're not bringing back 105% financing here. But these lenders said, hey, we should give self-employed people a fair shot at getting a mortgage. There's got to be a way that we can verify their income, make sure that they can afford these loan payments, but do it in some other way than just using the tax returns. So they did, with bank statement programs. Now, these non-QM programs, there's quite a few different programs. Some deal with investors, real estate investors specifically, but the one that I want to focus on today is specifically these bank statement programs, because they throw conventional wisdom out the window for the benefit of self-employed home buyers and home refinancers. With a bank statement program, you don't have to worry about showing your tax returns because, again, like we've established, the majority of the time, that's an inaccurate representation of what you make anyway. So instead, the bank, Super Loans, NMLS 237341, or any other bank who offers these programs, we're actually going to verify your income based on your last 12 or 24 months of bank statements. So we can actually see the real money coming in and going out and make an accurate assessment of your cash flow and how much you're making. That is what we're going to use to qualify you for a mortgage. The result? Highly increased buying power and highly increased, I guess I should say, borrowing power, because this isn't just for home buyers. This is good for refinances as well. And this isn't good for just the house that you're going to live in or already do live in. This program can be used for vacation homes or investment properties as well. With a bank statement loan, you're not hampered by that number on your tax return. You're not stuck with a lower maximum loan amount than you would otherwise have. You can qualify on the amount that you actually make, allowing you to borrow the amount that you can actually afford. And a lot of the times this comes as a give take, right? Some things sound too good to be true, and they usually are. There is a give take. It's not too good to be true, but it's not as much of a take as much as it's a give, because that enhanced borrowing power doesn't really come at too much of a price. Is the rate going to be a little bit higher than your standard conventional or FHA loan? Sure. But if it's making a loan available to you that wasn't otherwise available to you, that difference in rate is kind of a moot point because the other rate wasn't available to you to begin with. And down payment, I mean, don't get me wrong, we're not going to be able to do a bank statement loan with just 3 or 5% down, but 10% down gets you in the game. This is a very feasible option for all self-employed borrowers out there. And I just don't know why more mortgage companies aren't educating people about it. They're not letting the borrowers themselves know that this is available. Now, the parent banks that created these loans market the heck out of them to real estate brokers and smaller mortgage banks who then can offer them to you, much like we do. But those companies seem very content with sticking to the conventional and FHA and standard type loans, when I really think that there's a place in the market for this. I really think, especially over the couple years of COVID, how many people became self-employed, started their own businesses, or even their own side hustles. You can use that income to qualify for a home loan, and it's readily available right now. You don't have to wait on this stuff. Now, you don't have to be some sort of a prime credit borrower in order to qualify for this. You can get one of these bank statement loans with as low as a 620 FICO score, and the maximum loan amount on these things go all the way up to $4 million. So no matter where you're located in the United States, you're going to be able to find a home that fits into one of these for you. And again, this is good for your primary residence, the home that you live in, or the home that you're planning on buying to live in. It's good on vacation homes. It's good on investment properties. You can use it to purchase or do a rate and term refinance if you want to lower your payments a little bit, or if you want to cash out refinance to do some home improvements, pay off some debt, or just put a wad of money in your pocket for a rainy day. It doesn't matter. It's good for all of that, just like any standard qualified mortgage would be good for. These bank statement programs often open up doors for self-employed people that have been closed for years. If that's you, don't be frustrated any longer. You can check out all your options at superloans.com. Just head over there, Click on buy a home or refinance, fill out our quick 2-minute application, and one of our mortgage experts will be in contact with you for a custom quote in no time. Again, I'm Mike for Super Loans, NMLS 237341. And yes, I do realize that the computer that was here for the entire video is gone now because I got this footage into post and realized that my mic came unplugged during the outro. So here we are doing it again just for you. Thanks for watching, and we'll talk to you next time.